Good morning. Paul Georgie from Allendale. It's March 7th, Thursday morning, and we just got the USDA's weekly export sales number. The trade was looking for 450 to 600,000 tons sales on corn. Came in at 156.6. With that being new crop, the old crop had net cancellations in corn. The soybeans trade was looking for 900 to 1.2, came in at 1.382. So a good number there. However, most of that, 996,000 tons of that, was new crop soybeans. And wheat, a big number there actually. 350 to 550 was the trade estimate, and we came in at 828,000 tons sold. So some good numbers for beans and wheat. Corn, certainly not a positive. The market has reacted a little bit off of that, and we've seen corn prices drift a little lower as the report came out. The other factors that affecting the market this morning and that has given us some support is that the traders are looking at the oversold condition of the market. We've had a sharp break in the corn especially. That's providing a little bit of support, but with other fundamental news is not helping very much. The dock workers in Brazil are planning a one-day strike. That after news yesterday afternoon that the buildup of port shipments are continuing, so that's giving a little bit of support to the soybeans. The other idea is that China will come in and buy more old crop soybeans to fill their immediate needs from the U.S. However, didn't get a very good signal on that yesterday with the CIF basis for both corn and soybeans dropping, not giving us that signal that China's in looking for beans. Now, they may be buying beans out of the PNW where they can get them there quicker, but crush margins in China have gone down some, so they don't have quite the incentive there. CONAB, the USDA lookalike out of Brazil, came out with their estimates this morning on soybean production in Brazil. They dropped from last month. They went from 83.4 million metric tons down to 82.1. In corn, they kept unchanged, and the reason there is the look of the saffron crop continues to be very good, and that is probably a reason for them to keep that corn production there at 76.1. We do have USDA monthly export numbers, or monthly supply-demand numbers, out tomorrow morning at 11 o'clock. Trade guesses there. Corn, they're looking for a bit of an increase in ending stocks, 649 versus 632. Soybeans looking for a reduction in ending stocks there, and wheat looking for higher ending stocks. The other thing is the South American and Argentina production. Trade averages are thinking that the USDA will have a 25.6 million versus 27, so a reduction there. An increase in Brazil soybeans production, and increase in Brazil's corn production. Soybeans looking for both Argentina and Brazil a little bit of a drop in their production coming from the USDA. The talk also this morning is that an Indiana ethanol plant is interested in buying wheat to replace corn as seed stock at the ethanol plant. That could have some further pressure on corn if that actually is happening. The livestock news, we did a study yesterday afternoon. Rich Nelson looked at why exports have gone down so much in beef and pork. Japan is a big buyer of U.S. beef. Looking at the weekly data that we get from the USDA on exports, beef muscle meat actually has dropped 41% compared to a year ago in going to Japan, and much of that has to do with the exchange rate and the strength of the U.S. dollar. Since the beginning of the year, the Japanese yen actually has fallen 8.5% against the dollar. So definitely an impact, and watching the dollar show strength yesterday, one of the reasons why we've seen livestock markets under pressure in the futures because of potential export demand problems. Cutout values were up sharply, however, yesterday in choice, up 221, select up 328. This is happening because of supply, not because of demand. The snowstorms and the delay in moving cattle, the tight numbers that we see in cattle supplies, causing the packers and to not buy cattle because they're negative margins, and yet the supply of cattle just isn't there to fill the needs and help, and that's helping support the cutout values right now. Pork markets continue to battle the weather. We see cutout values there lower yesterday. The winter storms that have been moving across Iowa, Minnesota here in about a 3 to 4 day span has caused delays in marketing of hogs and delays in shipping of product out of packing plants. That looks to continue. The weather forecast now has moved this weekend storm further north. They could be hit again across Iowa, Minnesota with another storm. So the pork complex is battling that, and that's the one of the biggest concerns that traders have as far as the supply of pork right now. We did get egg sets yesterday afternoon. The egg sets for the month or the week is up 1%, and the chick placement actually is down 1%. So maybe a bright spot there, but still look for some very choppy markets as we go into the weekend and as we go into tomorrow's USDA report. So stay in touch with Allendale's research. Fill out the survey on the planted acreage. We've got a couple days left in that. Any help from you would certainly be appreciated. Also want to remind everybody for the next 6 sessions here, Steve Georgie will be filling in for me. I'll be out of touch. So we wish everybody a very successful trading day, and we'll be in touch with you tomorrow morning.